it does look like the speaker is going to have 218. He's bringing it to the floor. He's had a news conference after. Then what?
Yeah, and good evening. This is actually very important. Speaker McCarthy does look like he will have the votes for this sort of opening bid, this opening salvo, if you will. Of course, none of what the 218 will, or 219 or what have you, will pass will end up getting into law. But again, it sort of kicks off these negotiations as sort of an opening bid. So what's next? Majority Leader Schumer may bring this bill up, let it fail, sort of to illustrate that there are not the votes to pass the House bill and have it signed into law by the president. Of course, Biden's already threatened that he would veto it anyway. But again, the important thing, I think, from a market's perspective is that this sort of kicks off the process and likely will put some pressure on President Biden and some of the Democrats to actually come to the negotiating table with the Republicans in both the House and the Senate to hammer out a deal.
Libby, you're writing to clients today that it will be a bumpy ride, but the destination is known. The U.S. will not default. So what form is this going to take? Will they actually agree to lift the debt ceiling through May of next year or whatever the date ends up being, or suspend it for a couple of months while they figure out the path?
Yeah, well, I think it's the sort of vast majority of folks in Washington and including President Biden to postpone or suspend or extend the debt ceiling, however you want to phrase it, past the November 2024 election. I think that will be part of the negotiation, Joe. I think folks will be pretty loath to increase it for a short term. Now, that is certainly possible. And as we've discussed, it's dependent on when the X date falls. If the X date is closer to early June, then you may actually see a higher likelihood of just a short term deal. But I think assuming that the X date is sort of late July, August, around that congressional recess, I think they're going to try to negotiate to try to punt this beyond the November 2024 election. Again, I think that is one of the levers that folks will pull in this negotiation.
We heard from what President Biden had to say, and he said he would be happily to meet with Speaker McCarthy, but he didn't mention the budget. He just said he wants to make sure default is off the table. Is that the White House potentially opening up slightly to some sort of negotiation?
Yeah, look, I mean, the White House, like previous White Houses, have really tried to separate the debt limit from spending discussions, because as we all know, the debt limit is backward looking. It simply allows the country to issue more debt to finance spending that's already been appropriated or obligated or what have you. The budget discussion is more forward looking. So President Biden is trying to kind of strike that balance or that nuance. I'm not sure it's going to be able to hold. I do think that the White House and Democrats realize that this is just too important. The stakes are just simply too high for them to sort of insist on a clean debt ceiling increase. We will see, though. I do think there's some things, though, that Democrats can give to Republicans here that actually could benefit them politically as well. One of them is this energy permitting bill, this issue that has been live that Senator Manchin, the Democrat from West Virginia, has talked a lot about. President Biden has already indicated he would support this. So this could be sort of part of the negotiation. So again, I think kind of the bottom line for markets is we don't think there will be a default. We think it will be a bumpy ride, may not be a deal until the 11th hour, could be some volatility in the markets, but there will be a resolution some way, somehow. Again, the stakes are just too high and the political incentives are too clear to avoid default.
Libby, it was the default, not an actual, or the downgrade rather, not an actual default that hit the markets back in 2011. What's the conversation like right now at places like S&P and Fitch as they watch this unfold in Washington? How close to the X date do you think they're willing to go this time before taking action?
Yeah, I think, Joe, that's an open question. And for our clients, especially that are very sensitive to downgrades, it is going to be something that they're going to be monitoring quite quickly. Or quite closely, excuse me. I think Fitch has been the only credit rating agency who sort of indicated that if we were to default and yet bond payments were to be prioritized, that would still likely be a default. And that's important because there are some folks on the Hill who are arguing, well, as long as bond holders like Pimco's of the world are being paid, it will not be default. Fitch is sort of indicating, no, it actually would be a technical default, and that would have a cascading impact. That's, of course, the case of default, which we don't think, again, is likely. But again, an open question as to if there is no resolution, days before the X date, will the credit rating agencies move to at least put the country on watch? And I think that's very possible.
At what point, Libby, does the market start to actually pay attention?
Yeah, I mean, we've been obviously talking a lot about this with our clients. I will say this is our number one question that we are getting from clients. The markets, as you all know, are starting to dislocate in some areas. For instance, in the Treasury bills, lots of risk aversion, trying to avoid the 3-month T-bill, kind of going into the 1-month T-bill because that doesn't necessarily fall under this X date period of time. So we're already seeing some dislocation again, that front end of the yield curve. You're also seeing some dislocation in the CDS for U.S. sovereign debt. That is as we've talked about, a liquid, very small market. So kind of take it for what it is. But when does it sort of start impacting the broader market? Usually the equity market is a laggard. It doesn't necessarily react until kind of the weeks, if not days, before the X date. So I think there's going to be a lot of kind of sanguineness until then, until folks get some more clarity around the X date. And if there is no resolution, again, it's kind of weeks, days beforehand, then that's when you start seeing a volatility. Annmarie, just really an important point, though. All of that downturn in the market before the X date and previous debt ceiling standoffs have retraced, except for in 2011 when the market sold off for other reasons. The European debt crisis was front and center during that period of time, of course.